Namaste and hello everyone. Today I will explain you characteristics of accounting. For for the people who watched the last video, they already know the reason why it is important. But for the new viewers, let me tell you. Characteristics are basically like an umbrella. They cover all the topics which always confuse people because of the overlap of points like objectives, function, advantages and disadvantages. Remember as a kid, you were told that plants give us oxygen? But it was years later when you actually understood how the process of photosynthesis works and they produce oxygen in food. Similarly, characteristics are practical explanation of accounting. Till now, you just have heard the definition, but not the practical application of it. For that, let me read the definition of accounting. It is a systematic process of identifying, measuring, recording, classifying, summarizing, interpreting, and communicating financial information to its ultimate users. What I'm going to do is explain you the red highlighted part of the sentence. Along with that, we will together find out and understand all the characteristics of accounting. Let's consider a situation. You're 19 years young, your mom dropped you and your luggage in the college campus. It's your first time living alone, and on top of that, you are informed that now you have to take care of your financial expenses. It's second week of your college, and you decided to keep a track of expenses. Or I can say you decided to record transactions. You recollected that on the day one you were comfortably laying in your bed and scrolling through. Then you saw a picture of food and felt hungry. You dressed up and left the apartment to buy some food. On the way to the grocery store, you met your friend and chatted for a few minutes. Finally, you bought all the food you wanted. Now answer me one question. Will you write about that friend or the cost of the food you bought or both? You will only write about the money you spent, right? How did you make that decision? Basically, money rules. If you spend something or on some transaction which is financial in nature, all the employees are laughing in this picture. Maybe because they prepared a plan or budget for the toffee company. But that does not mean it will be written in the books of accounts, as it is just a plan, not actually in action. Identifying is a process of determining which transactions and events are to be recorded. They are financial in nature. Next is measuring. Try to remember how that bill appeared when you bought something from the store. It was something similar to this, right? For a moment, ignore the money value and see the units of measurement. Of watermelon is measured in kg, milk is measured in liter, and cereals in gram. There's a simple rule. Apple cannot be compared to oranges. Similarly, if all the units are different, how will anybody measure them equally or in a similar way? This leads to the situation of barter system. For example, if you want apple in exchange of banana, but the person who has apple wants oranges, and this is a limitation. Therefore, money is used as a common measurement term. You live in Delhi, I live in Bangalore, and our friend live in Mumbai. We all can buy things from other city without any problem. All of us provide services and take some type of services. In return, we either charge fees or pay. Sometimes we say, I'm satisfied with the service, and sometimes you say that how the slow process was. Those are emotions. They cannot be measured. We never say, my happiness is equal to 100 bucks. It means we use common measuring unit and it is universal. All the transactions which are measured in terms of money are called financial transactions. Efficiency, effectiveness, emotions are the non-financial transactions. Therefore, they are not recorded. Let Till now, we have understood identifying and measuring. Let's understand recording. We all have used diary or our phone at some point of time to keep record of items we buy or things we do. It might look something like this. But what do you think about this situation? Do you think it is possible for such a big store to write down everything in notebook and easily function? There are so many transactions like purchases, sales, losses, profit, return. For this, they maintain general book. The word general means a day book or daily book of accounting. It is a primary book of keeping account transactions are recorded in chronological order of date. It is subdivided into books such as purchase journal, sales journal. Here is an example. You will master it in future sessions. So now we have understood identifying, measuring and recording. Let's move on to classifying. This is the simplest way I can explain it to you. Journal entry is a part of recording which is simply all the transactions are in the same book like these mixed flavor of toffees. And classifying is like storing them in separate jars according to their flavors. Similarly, all transactions of a particular type of a particular nature are in a unique account called ledger. Now you might have a question. Why to record if we can directly classify, right? Let me remind you of your school days again. Remember early morning assemblies? Where students from all the classes used to stand together and pray? Principal ma'am used to give some instruction. Somebody would present a important topic like floods or fire. And then you will go to your classroom as a biology student cannot sit with account students. In the same way, similarly, ledger is a book which contains individual accounts head under which all financial transactions of similar nature are recorded. Here is a format of ledger which looks similar to journal entry, but it's different. Remember this journal entry? It is further recorded in ledger like this. Essentially, classifying can be explained as accounting is an art of classifying financial transactions. Classifying is the process of collecting similar transactions at one place by opening accounts in the ledger book. Till now, we have understood four characteristics. Moving forward, let me briefly tell you about summarizing. Accounting is an art of summarizing financial transactions. This involves presenting the classified data in a manner which is understandable and useful to internal as well as external users of accounting statement. The process leads to the presentation of following statement: trial balance, trading and profit and loss account. In case of a company, it is known as statement of profit and loss. Exact same format, exact same process, just a different name. And balance sheet. Basically, all the transactions you recorded in journal entry and ledger, they are further recorded in some other accounts to find out profit, loss, and other valuable numbers. A financial or accounting summary sums up a company's financial activities for a specific period of time. Summarizing business transactions can help a company to make future plans regarding growth, sale, and profit by looking back at what was achieved previously. Financial summaries are created as financial statements. So the three accounts I just told you are called financial statements. So now we have understood five of the characteristics. Next is interpreting. The term interpreting is self-explanatory, which is primarily is to explain or simplify accounting information. But for that, we need to analyze first. Let's assume I am part of a football team and we lost final match by 1 point. So all the team members decided to write down all the mistakes and strengths and work on them. You are a CEO of a toffee company, and you will also make the list of your strengths and weaknesses. Here's the list. See, I wrote about goals we scored. You made a good point. You talked about the profit you earned last year. Goals we missed. Maybe we would have scored those Loss incurred, that's important. Fouls and penalties, that need to be recorded. You should definitely talk about the wastage while production or the failures. Maybe you are not able to produce properly. And future plans, what we can do in future to improve ourselves. Right? The term financial analysis is also known as analysis and interpreting of financial statement. Refers to the process of determining financial strengths and weaknesses of the firm by establishing strategic relationship between the item of balance sheet, profit and loss account and other operative data. Now there must be somebody who wants to read and use all this information. Otherwise, what's the point of so much preparation? These people who need this information are called users, which can further classified into two groups, internal and external users. And this is known as communicating financial information to its ultimate users. Kudos! You have understood all the characteristics. Now, question is for you. You have heard me saying repeatedly accounting is an art of. But there was no sketch or a cute baby elephant painting. Then why accounting is an art? Explain me in the comment section. In the next session, I will tell you about the branches of accounting. Till then, happy learning!